Good evening, everyone. It's great to be here. Great to be in Edinburgh, and actually great to be in front of people rather than in front of a screen. So I'm CEO and Technical Director with Alien Metals. We've just recently done a bit of a rebranding and sort of picking up the pace a little bit with all the exciting projects we've got. We felt it was time to get the momentum moving forward. So we're a precious, quite different to what Nick does. So we are a precious base metal explorer and developer. That's a picture of one of our iron ore projects in the Pilbara in Western Australia. One of the guys took that. Unfortunately not me, because I haven't still got there. COVID's been quite restrictive in that sense, obviously. So that's what we do. Disclaimer, competent person statement. So we have competent person for making sure we're doing everything properly, reporting properly for the Australian projects, for the Mexican projects. So board and management. So we have a really strong board, I'd like to think. Dan Smith, he's based in Perth, so Western Australian based. Great, that gives us a really good spread and a local sort of base for what's going on day to day in Australia. And he's got some good background in the resource sector. Mark's from a legal background, but he adds that aspect to the pot. Myself, mainly I'm a geologist from experience, so what I do is exploration, and now doing a bit of sort of corporate CEO stuff. And then Joe, who you'll meet a bit more in a minute. Joe's also, he's both a geologist and a corporate fellow, so adds some excellent combination of skills to the team. And we've got Lloyd, who's our country manager for the iron ore projects based in Perth, and Howard Baker, who's a highly experienced resource geologist working on the iron ore. Bit of market information. As you see, I'm very happy to see that going on. It's been, we had a spike and then it's been sitting down a bit. But I'd like to think we're starting. This is actually a little bit out of date because we're probably more over the 42 now. But as you all probably know, it swings and roundabouts at small scale. But what's quite significant is over 3 billion shares traded in the last 6 months. Really liquid stock. I think this morning, by 8:30 there were 16 million shares already traded. So there's a lot of volume moving, a lot of liquidity. It's we hope to keep that share price rising. So we're talking about multi-commodity portfolio, a project generator. So we get projects, we look at projects that we feel have been underexplored, underdeveloped, under sort of valued. We pick them up. We try and get them for the best price possible, for a fair price that we think is fair to us, to our investors, to then add significant value to, and then bring them up, develop them. So we currently got three main projects. So the Money Elizabeth Hill project in Western Australia in the Pilbara. So that's a combination of silver from the Money Elizabeth Hill mine, historical silver mine, one of the highest grade silver projects in Australia. And then the Money, we are in the throes of finalising the deal to purchase the joint venture project, which includes the platinum palladium deposit resource that's never actually been mined, and really we feel has great potential for the future, as I'll go on to talk about in a little bit. The Iron Ore Company of Australia, fantastic projects. We've really fast-tracked those. We've got really good progress on those. And then Mexico, which we did an announcement, if you saw this morning. Finally, we've got the permits there, so we're going to be getting out there drilling in the coming weeks, and then hopefully I'll actually be out there as well and finally get my boots dirty and dusty and see some living geology. So green iron ore, it's green because it's a high-grade product. It needs minimum work. It basically, you get your hammer or your bigger version, you dig it out, you put it in a truck, you send it to port, you send it to the smelter, and out the other end pretty much comes steel. Steel is one of the core products required for the next however many 10, 20, 50, as part of the growth, global growth. It's one of those key pillars. We have that excellent high-grade product, so it's the green iron ore, and looking at, you need steel for everything that goes on, everything from the EVs to the cars to the solar, the wind turbines, everything. Steel is that core. Great project. Then we're also now we're looking at, we've got the silver, we've got the nickel, the copper, the platinum, the palladium. All these commodities are part of the growth, the future of this, of the globe, of us, of humans. All part of the EV revolution. And I'll just go to the next slide. This is something everyone talks about, electric cars, and we've got 2030 is it, I think, or 2040, that everyone has to be electric. But if you look at this section of the graph, those are the combustion engines that are still going to be required during that transition period. And those combustion engines, they need catalytic converters, and in catalytic converters you have the palladium which is critical. And I think there's various, you can look on various sites and you get different amounts, but they talk about 4 to 6 grams per catalytic converter. So if you look at the number of vehicles they're talking about there, and the period, next 30 years, 20 years, sort of huge demand. And also for hydrogen technology, hydrogen fuel technology. It's an amazing metal, palladium, and we think with the new project we've got coming on stream soon with Money, we've got something significant to add to the pot, to add to the portfolio. ESG, very important, environmental, social, governance. So this is a way forward as well. We are at that stage. We're not miners yet, so we need to be cognizant of how we do our exploration management, how we relate with the local communities. An example, as the announcement today, getting the local communities over the line in Mexico to make them understand what we're doing. We're doing it environmentally, sensibly, responsibly. We engage local communities to help with the work, both from as labouring on the drilling machines, as clearing, as supporting, whatever it might be. And then governance, here we are, this is the company, this is who we are, we're here, we want to engage everybody in what we're doing for now and for the future. So this is important. So as we move forward, as our projects develop, should one day we become miners ourselves, obviously then we need to adapt and keep growing this whole aspect of the environment that we work in. So iron ore. So we're a future iron ore miner. That's our strategy. That's what we're working towards. We probably won't need any of those because the way we're going to be looking at it is slightly different. It's a small scale, high grade, and this is what the beauty of these projects are. Small scale, high grade. You don't need 400-ton haul trucks like that to trundle around the countryside. You need the smaller ones. You basically need to extract the ore, put it in the smaller trucks, and deliver it up to Port Hedland at the moment from Hancock, where our maiden resource is. Up she goes up the Great Northern Highway into Port Hedland, which has the current infrastructure, the port infrastructure. Looking, our maiden dual compliant inferred resource that was September last year. I think we proved that up very quickly and significantly. I think for I'll come back to that one. Significantly for what we sense on this project, you have the resource of the 10.5 million tons is contained in these 1, 2, three very small pockets, small areas, and then you just need to look at the remaining ridges, iron ore bearing ridges within just the Hancock tenement. So you get a sense of 10 million tonnes from those three sort of areas. How much more have we got here? And that's one of the focuses of work being done at the moment. And we'll, keep watching this space as we get results coming through from work we're doing at the moment. The Hancock project, as I say, this is, if you're not quite sure, this is a sort of 3D model of the ore body at Sirius, which is called the Sirius extension, which is in the northeast. So that's Sirius tucked up in there, which is actually the extension of a much larger ore body that sort of sits on the corner. That we're in touch with that's actually Hancock mining group, hold that, and we're already in discussion with them about synergies to work together. So this is sort of a three-dimensional block model to show that's the ore body. Very typical, but significantly it starts pretty much at surface. Very nice, well constrained, very nice, typical, straightforward ore body to mine. From the capex, less than $30 million to go from where we are today to be in production is quite really unheard of for an iron ore project. People think of iron ore as $10 billion railway, a $5 billion port and everything else. We don't need any of that. And the early scoping study work has already shown that. Coming out at less than $60 US a tonne to port. So that means that's the product delivered, all the costs associated getting it to the port, getting it to Port Hedland. Currently I checked tonight, spot price for the high grade is $146 a tonne US. Even if you take obviously, potentially not getting the full amount, even at $130, $125 a tonne, that's a significant markup, even on our sort of plan, 1.25 million tonnes a year. So, depending what number you want to put at the end of it, that's a significant project with, at the moment, an 8-year mine life based on these numbers with, and that's the other significant point, nearly a 1-to-1 strip ratio. Therefore, the waste to the ore is almost the same. You're not having to move lots of excess dirt to produce your product, which also impacts on the cost, reduces the cost, your final cost. So as I say, really, I'm hoping after Easter, when restrictions are lifted in West Australia, to spend a few weeks, with my without my jacket on and doing some exploring on these ridges, because they're all iron bearing. And let's not forget that. Okay, here's a bit of a video. So this gives you a sense. So these are the ridges. That's Ridge C, and that's the resource sort of up to about there. That's all we've actually done so far. So there you can see there's C, there's E, there's the resource sitting there. But look at the remaining, you can see how many more. And this is just in the northwest corner. So just that section of the ridge, sort of 1.1 million tonnes. We find another 3, 4, oops, it's not too happy, but you can see it just goes on and on and on. And there's Newman in the background, so that's a sort of local mining town. This is Ridge F that we recently did some drilling on as a new target. And you can see there's the rig, and so we did 2 holes. You can see the iron there, there's iron there, there's iron there. So testing it, we drill both ways just to see. Waiting for those results, but all really encouraging. This is a sort of toy you might use for mining in this environment. You don't need to dig a hole because the material's at surface. So you put it's like, you might have seen these on the motorway when they're stripping off the tarmac, when they're relaying a road. This is a similar machine. So you just run it along. It produces the product straight into mobile units, straight to market. So incredibly efficient, low cost, low impact as well. And that's it. And then you come behind, put a bit of topsoil back on, and it's all back to normal. This, if you can see, so that this is now Brockman, the second project, iron ore project on the west, further west. That's the outline. Sorry, it's a bit, the colouring is not ideal. But again, huge number. I mean, those are, you don't get much more than 67% iron ore in laboratory results. So at 65 and a half, you know, we've had some spectacular results already from surface. We've now just starting our, these are our planned first phase drilling to get this project underway, to add, again, hopefully get the next resource in the iron ore. This is, again, it's probably better to see in there's some copies of the presentation. Please help yourself out the back. This is just showing a bit of this beautiful core. Well, as a geologist, I find it beautiful, others might not. You know, these sulfides in the core from Elizabeth Hill, the drilling we recently did, that is actually a part of the picture of the 145 kilogram silver nugget that was extracted from the mine historically, from, I think we believe from 82 levels somewhere in the mine. So Elizabeth Hill, previously producing historic silver mine, incredible grades. I mean, 2,200 grams average grade is incredible. I think what's significant though is the main mining was done on this underground level. Nothing was done here. Very limited work was done to test this. Hence, one of our early drilling. So this is the equivalent of the top layer of the deposit. And here, again, this is you can see that's probably one of the biggest drill intersections in silver. We're just trying to find out from, I think it's Mining Journal or someone, but significant. I mean, just 24 meters at 830 grams a ton from the top, basically to the bottom of the hole, with the whole decline. We couldn't go any further. This oxide area is looking really interesting, but also, and we talk about it more in the appendix, significant copper, nickel in this sort of larger system that surrounds the high-grade silver in the middle. This is just a little, I'll just quickly show, this is a sort of 3D model, again showing the drill holes, where they intersect what is the original older resource outline. So outline of the ore body that was modeled from nearly 20 years ago. What we find really interesting is obviously you can see that very strong trend of the main intersections, but there's pretty much mineralization right through this area, but it doesn't really sit comfortably with the old model. So we feel there's potential for a lot more silver. And these other holes, these are the RC holes that we're waiting on the results that we did as part of this program. And then, as I mentioned before, we're looking to acquire the Money project, which again has a non-compliant sort of nearly 2.2 million ounces of PGEs, significantly palladium, platinum, gold, and also rhodium. And rhodium, I think when I last looked, is about $10,000 an ounce. Now, again, this is all highly underdeveloped. We feel, again, this, and there's Elizabeth Hill there. So this is a whole big system that we now will acquire and be able to really work up as a much larger project and a sort of conceptual study on how this all fits together. And we feel it does. We just need to find the key. And then Mexico, I'll quickly whiz through Mexico. So San Celso, again, a couple of fantastic historic silver mines. Again, eye-watering grades. These are the two veins with the two old mines sort of focused here and here. But then there's more mines down here, more old mining works. That's just the Nueva Andromeda license we picked up about a year ago. So we've got a sort of option on that as well. So just extending our holdings there. Los Campos, that's sort of, that's even longer system. Again, those are all old shafts going down. You can see mined out, or partly mined, I shouldn't say mined out, partly mined along a long intersection. And actually, this picture is from Los Campos, and that's all the historic mining work. You can see it just runs sort of small open pits all the way along the surface here. These are all waste dumps from some of the shafts. Really impressive historical workings that we're now excited to be able to drill. And again, huge, fantastic numbers. We're picking up 540 gram material from surface, which people say was, that's the waste dumps. And then Donovan 2, Los Alamos target. I'm running out of time here. Los Alamos target is essentially there's a water well there. We took a sample that came back 3.3% copper. You can see the copper in the samples. That was not. We don't feel that was tested at all properly by our previous partners. So that's our focus, to find that source. There's copper in then the hills sort of thing. And don't forget, we're just down the road from Teck, the San Nicolas project, which got 110 million tons at 1.2% copper. So that's us. We got, I think, a great bunch of people. We got a small team in Mexico, team in Australia, team here in the UK, more on the corporate side. I'm chomping at the bit to get out and spend some time as a geologist as well. Great commodities, great jurisdictions, and I think we're in a really good position. We're well cashed up at the moment. A lot of plans to do some work in the coming year. That's us. And as I say, in the there are a few slides in the appendix. Some you might have seen, some you might not have seen. So thanks for your time.
Excellent.
Has anyone got any questions?
Thank you, Bill.
Thing is, at the moment we're explorers rather. We're not miners yet. So what we need to do is we feel that by acquiring these for minimum cost, and then we need to put some money into the ground, which is what we're doing, to then have. So, for example, probably the most advanced in that sense would be the iron ore project. So, we could say, and our books will show, I suppose our annual report will show that, this expenditure on exploration on that. The value is really it's a difficult one, because our value is not necessarily what someone else's value is. The value is in the resource and the commodity. So at the moment, as I said, the iron ore, we've got an inferred resource of 10.5 million tons of high grade, so 60+%. 60+% at the moment sells in the market at a maximum of $148 a ton. So even with our, even if you scale that back and took 10 or 15% off, you could say, well, you could work out on a piece of paper, well, it's 10 million tons at $120 a ton, the sort of intrinsic value. And then I can't do that. I'm not allowed to do that, obviously. But we're at a stage where, and also it's sort of who comes in to look at the projects. Because in a way, as you see, there's 3 core projects. So there's sort of the Elizabeth Hill, money, silver, platinum, palladium, copper, nickel. There's the iron ore, and then there's the Mexican, mainly silver with copper. So it's also, we could say it has a certain value, but that doesn't, sometimes that goes against us, because then other people go, well, they've overvalued it by 100%. Oh, I honestly, I couldn't say. I suppose it's supply and demand, as ever. I think it was at over 20,000, a couple of years ago. Again, it's probably all about supply and demand. Like all these commodities, the demand, the iron ore demand supply is lower now. It's interesting because Nick was talking about Brazilian. They're probably all the guys who aren't working in the iron ore industry in Brazil anymore because they're having problems, so they've come over here to be courier riders. So it is, it does fluctuate. Yeah, so the question was about Hancock. We proved up 10.5 million tons in a certain area. The question was, how much do you think is that? How much more potentially is at Hancock? Look, the thing with Hancock, we know all those other ridges are iron bearing. We don't know how many of them are high grade. Because even the high grade ones we defined, under the high grade you've got lower grade material, which at the moment is not our focus. So, I could stand here and say I think there's at least double or treble what we've already found. But I have to be careful because that's me as a geologist saying, oh yeah, looking at that looks amazing and that doesn't look so good. And from images, I haven't yet been there, as I say. I'd like to think there's a good chance of doubling what we've got at the moment, but that is speculation. It's not. We've got to prove that, and that's what we're working on at the moment, and that's what our budget is for this year as we're coming out, because it's cyclone season there now. You don't want to be up there now. It's a lot of rain, a lot of heat. It's a really, really difficult place to work. So come after Easter, it's the winter down there. It's a great time to be there. So we've got plans to work it all up. Brockman is looking at the historic, the ground, the grab sample results. And from recent, we did some heritage surveys recently. We used a geologist from a well-known consulting group who went out and supported that. We'd like to think we get the same, if not better. But again, I have to be careful. We have to work it up. So we have to go and do some drilling as we're planning and start seeing exactly what we got.
Yeah, have to drill it.
But to be honest, we've got 10.5 million tonnes, high-grade product. We're already talking. People are talking to us about it. That's a great start. I mean, it's a fantastic place to be already. And I think anything else is going to be sort of obviously a bonus and add to the potential either mine life or volume of product annually.
Right, have we got any other questions in the room? I might ask just a very quick question
Sure.
then, Bill. So you mentioned that you were cashed up, but could you maybe talk a little bit more about how the company's funded and, to what extent your work for this year is funded?
So we did, our funding comes from capital raises through our brokers. We did a very successful one in November. And at the moment, so our funding comes from those capital raises. However, we are always talking to other parties, to groups. Obviously, as I said, with the three main projects, there's parties interested in the iron ore, there's parties interested in the silver, the palladium, the platinum. So we are looking at other avenues for funding as we develop, because at each step, if we make each project more attractive, then that becomes possibly attracts some funding externally as well.
Sure. Okay. Excellent.
So we've sort of, the plan on the table is to work, if we can achieve everything we want to do, so to be, we've got sort of funds in the bank for 18 months, okay, and that's to work up more work at Hancock, so to increase the resource, find new targets and hopefully add them into the pot, continue the development work, the mining development work, the permitting work to get shovel ready. Also at the moment we got funding for possibly 2 rounds in Mexico, but it's always results dependent, which is why this first round we're going to do limited drilling on each project, but hopefully sort of pinpoint targeting to get that sense of the potential. And then should all 3 come in, which I'd love them to, and I believe they will, then we can we've got some at the moment to go back and look at. But as I say, as we add value to each project, there are parties out there who go, well, they're starting to do the groundwork and they've done to a certain point, and that's when people start coming in, and especially, once you start drilling, other external parties get much more interested when you get positive results from the drilling, and that's what sort of held us back a bit in Mexico, to be fair. So at the moment, it's a function of where we go, and globally what happens as well. I mean, we've got to look a little bit what's going to happen down the road, not quite down the road, but be cognizant. We need to be cognizant of that as well. So we're always looking at ways to maximise our spend, make it as efficient as possible, and we can adjust according to which project becomes more. Does that become the priority project? For example, if we go to money and we drill 5 holes and we actually go, well, hang on, we can double the resource very quickly, then maybe we move some funds across into that. So, you know, we're flexible as we can be.